What's up everyone, I'm Steven and welcome to my channel. This video is all about Fidelity Options Trading. I'm going to talk about what options are, show you how to apply for option trading on Fidelity, and show you how to trade options on Fidelity with a specific example. My channel is about 90% investments, 10% speculation, and 100% wealth creation. If this is the type of content you enjoy, go ahead and hit that like button and that subscribe button. Options are a challenging and exciting asset class. There are many types of options and option strategies. Why should anyone trade options versus trading stocks? Depending on the option strategy, options can require less money to trade. You can cap your potential downside amongst other benefits. For the investor, options are a fantastic way to hedge, generate income, and for traders to speculate in the market. Fidelity is known to provide an industry-leading, low-cost premium options trading experience with no base commission and just 65 cents per options contract. I also happen to be a long-time user of Fidelity, so not only do I know the platform inside and out, I will take you on a tour of my account and show you what options trading looks like. Let's get started with talking about what options are. Options are financial instruments that are derivatives based on the value of underlying securities such as stocks. An options contract offers the buyer the opportunity to buy or sell depending on the type of contract they hold, the underlying asset. Now let's show you how to apply for options trading. Log into your Fidelity account. Go to Investment Products on the navigation bar and select Options. On this screen, you can hit the Apply to Trade Options button. Hit Apply for Options. This will bring up an options application that you will review and edit. The application will ask you for personal information related to your employment, financial information such as income, net worth, your investment objectives for the account, and options experience. Based on your personal information that you answer, you will be approved for one of 5 options levels. The levels are determined by how sophisticated the option strategy is and the higher levels of risk associated with them. When applying for the first time, you're most likely going to be approved for levels 1, 2, or 3, and you may be approved for level 4 and level 5 depending on your assets and level of experience. You must have a higher level risk tolerance to be approved for the higher options levels. Level 1 includes covered calls, rolling covered calls, buy rights. Level 2 includes buying calls and puts, selling cash secured puts, long straddles, and strangles in all of level 1. Level 3 includes spreads, covered puts, and all the previous levels. Level 4 includes uncovered calls and puts, short straddles, and all the previous levels. Level 5 includes uncovered calls and puts for index, short straddles for index. For levels 4 and 5, you'll be applying to add margin to your account at the same time. It can take anywhere from the same day to a few days to get approved. You will receive an email from Fidelity once you're approved for options trading. Once accepted, you can confirm your options level by going to Accounts and Trade, Accounts Features, Brokerage and Trading, and hit Options. Here you will see the option level that you are approved for and the trading strategies associated with your level of approval. After you're approved, you'll be able to trade options. To trade options, go to Accounts and Trade and click Trade at the toolbar on top and select Options under the transaction type. At the top, we will see the buying power we currently have available to trade within our account in our options level. Next, we will enter the symbol of the stock or ETF you want to trade. This will bring up general information related to the stock, and you can expand for more quote information. Under Strategy, you will see various option strategies available: Butterfly, Buy Right, Calendar Spread, Condor, Iron Butterfly, and others. Today, I will demonstrate a single order, specifically a long call option on Apple stock. Let's enter the underlying symbol Apple, or you can use the symbol lookup. By entering a long call into Apple, we will have the right to buy Apple once it reaches the strike price of our option contract. We are making a speculative bet the Apple price will go up. An alternative strategy is buying a long put option, which is what you would do if you want to make a speculative bet on the price of a security going down. A put is a different strategy you could use. Let's continue with our long call option on Apple. The current price of the security is automatically shown, along with the day's change in price and percentage. Next, we are going to select our action. Buy to open means we are buying an options contract. Then we enter the quantity of contracts. Keep in mind that one contract refers to 100 shares of the underlying stock. We then select either call or put, and we will pick a call for this example. Next, we enter the expiration date. If the underlying security does not reach the strike price by the expiration date, then our option will expire worthless. Then we will select the strike price. For a call, the option will be more expensive with a lower strike price and the further out the expiration date is. We will then select the order type. Market orders will have the fastest execution at the best market price. For a market order, Fidelity will keep the order open for a full day and will close if not executed during the day. If we want to select a specific price, we can enter that. We can do a limit price for $3.55, which is the current asking price. For trade type, you can use either margin or cash. We will select cash. For brand new option traders, be especially careful if you consider using margin, if you're unfamiliar and uncomfortable with leverage. Margin can easily wipe out an account if you're not an experienced trader and do not understand the risk. After we have entered in all the information for our call options, we can see our max gain, max loss. We will see our max gain is unlimited and max loss is negative $355. Break even is Apple at $153.55. Our max loss is capped by the money we spent to buy the call option in case the contract expires worthless, but we have the potential for substantial gain depending on how much the price of Apple rises. Before you preview your order, a very useful tool is the profit loss calculator. Click on the profit loss calculator. This will open a new window displaying the profit loss related to the option you are buying. There's a lot of information available here and for you to mess with. With the call option we selected, if we set the graph to show profit and loss at the expiration date, we see that the break even is $153.55. And visually, your maximum loss is negative $355. Now, if the stock price climbs, you will make more money. If the stock price goes up to $210, you will make over $5,600. Now, let's go back to our previous screen and preview our order. And we see our estimated total value, our cost to buy the call option is $355.65, which includes a 65-cent fee and is also the maximum amount we can lose. Preview your order. You will see you are buying to open one call option with an expiration date of December 10th, 2021 at a $150 strike price. It is a limit order for the day and you are using cash. If everything is correct, hit the place order and there you have it. You have placed an order for a call option. If your option gets in the money, you can decide to execute the option or close out the option prior to the expiration date to secure your gains. I also want to show you another way to view options on Fidelity. When you are entering your order, we can view the option chain if you click on the option chain. The option chain may look complicated initially, but it is a great way to see valuable information when trading options. We see expiration dates in the middle row, which we can change if we would like. The last column is the last price. We see calls on the left-hand side and puts on the right-hand side. The strike price is down the center. Bid is for selling to open an option position, and ask is for buying to open an option position. On the option chain, we can easily see and evaluate the prices and premiums at different strike prices. Once you get familiar with the option chain, you can click on bid and ask to trade options directly off the option chain. If we wanted to do the same trade example we did earlier, we would go to December 10th, $150 strike price, and click on $3.55 buy to open. This will auto-populate our buy order, change the cash, and preview order will bring you the same order. Hope you guys found this video helpful. If you enjoyed this content, please like the video for that algorithm, subscribe, and hit the notification bell for more videos delivered to you. Leave any questions and comments you have down below. I love hearing from you guys and I read all of them. Have a great one.